Good afternoon, everyone. My name is David, and before I introduce myself, I would like to ask you some questions. Who in the room has already issued a token? We have some token issuers, a couple of them. And who has ever talked or dealt with market maker or market making activities? Not many people, a couple, okay. Cool, thank you. My name is David. I'm running Flowdesk for Asia. I'm based in Singapore. I'm a French, as you can hear. Flowdesk is a crypto market maker that was started in 2020, and what we are doing is connecting token issuers to exchanges. But let me tell you why I'm here. I'm here today because all along my career, I tried to fix inefficiencies in the world of trading. I started as a trader in the large banks. Following what, I built a company, a fintech company. I've been an entrepreneur for 10 years. First in traditional finance, and then 2 years ago, I joined Flowdesk in Asia to start and to scale market making. So today, I will share with you what is market making, why you will most likely come across market making needs in your token journey, and what is it we are doing. So what is liquidity? Liquidity is a core concept around market making. Liquidity, very simply, is the ability to buy or sell an asset in the market without moving the price by too much. So you can imagine a very busy market. Maybe some of you are going to south of France at the moment. It's very busy. It's very liquid. There is a lot of buyers, a lot of sellers. But imagine the same place in the winter. It's very dull, and there is not enough buyers for sellers, etc. This is what liquidity is, and we are trying to increase the liquidity in the market to make adoption better. As a token issuer or as a market participant, the biggest pain point you could face is low liquidity. So in the current times, we are facing very low and decreasing liquidity. You can see in the charts what happened after FTX collapse and all the scandals in 2022. The top chart is the number of Bitcoin you can buy in the market without moving the market by more than 2%. So 1 year ago, it was about 12,000 Bitcoins. Nowadays, it's 6,000, so it decreased by 50%. As a result of that, the intraday liquidity and volatility of Bitcoin has grown, almost doubled. So liquidity, low liquidity means high spread and more expensive trading. Now, loss of control is a second aspect of market making, of trading your asset in a digital ecosystem that you should be concerned about. We will see that in a minute. Conflict of interest is when you give a lot of tokens to somebody who is going to dictate what happens to those tokens. That requires a lot of trust. And as you know, in a permissionless world, trust is central. And of course, as for any product, cost of market making activities is a concern, and it's a subject of interest. Now, what is market making, and how is it making things better for those topics? So on the left side, you see a token or an asset that is not ideally covered by a market maker. So the price action is a bit erratic. You see the order book is a bit depleted with only a few and weirdly distributed orders in the book. And very important to crypto, the same asset has a different price on different venues, which is a major concern for the issuer, but also for the users. So on the right side, you see, when the market maker is doing a good job, you see the price action is much smoother. The order book is at all time is well distributed and nice. And very important, the price is harmonized between the different venues. So now that we have seen what is market making and how it can help you, we are going to explain two different models of market making and why we did Flowdesk, which is market making 2.0. So what we call here market making 1.0 is basically the traditional finance market makers coming to crypto with the same model. So most of it is prop trading. So trading your proprietary assets and capital to make money. So it's prop trading activity. Most of the time in crypto, there is also a loan that the token project is going to attribute to the market maker, and sometimes with a call option. That makes, now if we think about the revenue model of those activities, the market maker in such a model is making money by trading, so prop trading. They get all the risk, but also all the rewards of trading, and also the call option, so they benefit from the token price going up. Now we looked at it and we said, okay, why can this be improved? So the first thing to note is that compared to traditional finance, the crypto world is very, very fragmented. At the moment, we have about 600 crypto exchanges that are trading tokens in the market for about 20,000 tokens. So even some very small market cap projects are getting listed on exchanges, sometimes on multiple exchanges. Sometimes the same token is traded on different venue against different collateral, when USDT, in ETH, in Bitcoin. So all of that creates different needs compared to traditional finance. And we thought, okay, how can we improve things? So the first thing we wanted to improve is how to improve the quality of service. And to the first thing that is very important, get back control. So it's a link with almost every speaker in this conference talking about private key. You control your asset, you know what's happening. So we wanted to put that back into the center of the product. So get the control of your assets. And then, very important when it comes to trading, whether it's crypto but also traditional finance, of course, to try to minimize and control the conflict of interest. So that's when we came up with what we call market making as a service. So of course, it's inspired by the tech subscription model. So in our model, you can see the token issuer or the exchange renting out an infrastructure, trading algorithm, but also physical traders against, and the cost of that is not unknown, is very certain, is very concrete. It is a monthly subscription. So you know exactly what you spend. And by doing that, we think it's a fair approach to market making. Now, if we draw a little, very simple schema to understand what's happening, in practice, the token issuer is going to open an account, whether it's a DEX or on a centralized exchange, and fund this account with their own tokens and capital, both sides of the book. And Flowdesk, as a market maker, or any market maker doing market making as a service, by the way, is going to do the trading and control the liquidity, the order book, the capital rotation, the movement of collateral between the different exchanges by API key. So we will own the API key, but the API key doesn't give us the right to withdraw or to touch the money. So the money is always under your control with your keys. So that's the fundamental difference. Now I mentioned the decentralized exchange part. So very important to us, we are connected to about 100 exchanges. The reason for that is because, as I said before, there is a lot of exchanges, it's very, very fragmented, and we want to cover and to have the biggest reach possible. So why decentralized finance is getting more and more important? It's because of all the scandals that happened last year, right? We saw that 9 months ago, the market share of decentralized exchange was just 7%, and it grew to 20% today. So as a market maker, if you want to be having a meaningful impact on liquidity and trading of tokens, you want to be connected to decentralized venues. And it's what we are doing at Flowdesk. Let me share a quick word on technology, because I know some of you may be builders and tech people in the room. So to build something very scalable with the biggest reach, we are fully based on the cloud, with 3 main clusters at the moment. We are connected in North America, in Europe, and also in Asia Pacific. We also implemented a private backbone. Private backbone is an ultra-fast connection that we own ourselves to trade trading pairs that are requiring much faster speed, such as perpetual and derivatives. And as I said before, we are connected to 100 venues, which make us a very large reach, and that gives us, in turn, the ability to cover a wide range of tokens, even very small market cap for a small price. It makes us affordable as well. Now, you may have heard a couple of pointing to compliance. Compliance has been always centric to the company. We believe it's a big need in the market, and myself coming from traditional finance and banks that are now over-regulated, coming to crypto is a bit of a shocker. You're like, wow. So a metric that is very striking, Bloomberg study showed that 56% of ERC20 tokens have experienced insider trading activity when they launch on the top 3 centralized exchange. So that's a crazy number, if you think about it. So how we tackle this? We tackle this by being proactively talking to all the regulators, all the jurisdictions we cover. So we started in France. We are very close to AMF and Banque de France. We are covered with MiCA. In Europe, we are talking to MAS in Singapore, and we're going to do that everywhere we go to keep compliance at the center of what we do. So as we conclude this quick note on market making, is a sneak peek of what we think about the market at Flowdesk. We think that we are currently in a bit of a low 2022, 2023. It's a low point. We know why. We all know why we're here now. We see some positive momentum at the moment. We think that's going to continue to happen. So, moderate growth in a low volatility environment. And we think that the next bull run will happen after that. So that's a common shared view. What is interesting, and what we position the company for, is that we believe that the tokenization of real-world assets and securities is going to boom and to explode in the years coming to 2030. So this is the purple part. And this is what we are bracing ourselves for at Flowdesk. We want to be there to tackle this exponential growth of tokenized securities and the real-world assets. So I hope you enjoy this quick overview of market making. And I will invite all of you to the booth on the first floor where you can have some real-world liquidity, aka drinks. Thank you.